So we're talking about the taxes that residents and non-residents will pay when they buy or sell property. Okay. So basically, when you buy a property, you're going to pay transfer tax for a second-hand property. And those rates vary from region to region, but generally between 6.5% and 10%. A brand new property, you pay either VAT at 10% plus stamp duty of between 1 and 1.5%. And then in the Canaries, it's slightly less. The EVA there is 7%. So those are the taxes you'll pay on purchase. But when you come to sell, if you are a non-resident, then the buyer's lawyer is obliged to hold back 3% of the purchase price of the property, and they pay that to the Spanish tax office. So that's basically on account of your potential capital gains tax liability. 3% is paid to the Spanish tax office, and then you as a non-resident seller of a Spanish property have 3 months to submit a tax return. If you've made a gain, then you will pay tax on 19% of the gain, and all of the costs of purchase and all of the costs of sale are deductible. But the 3% comes off the tax liability, and the tax rate is 19%. If you are a resident selling a Spanish property, then in effect, you sell your Spanish property and you've got to put in your tax return the following year. Okay, and the general principle is that as residents, we do get taxed on the sale of our Spanish property, which is our main residence. But we can mitigate that so long as we reinvest all of the profit into our next property. And then we stay there for at least 3 years. If we don't do that, then we get taxed on the gain that we have made, and the starting rate is 19%, and 19% to 23%.